humanitarian aid. Okay, this is how we can design. But the question is, how do the stakeholders react on this initiative? For example, I asked you, the central bankers, do you have the central bankers here? Do the Central Banking Act define the financial system in your country as accordingly that what you want? For example, the Central Banking Act of Malaysia defined that the financial system in Malaysia comprise the conventional financial system and Islamic financial system. That is very fundamental. So meaning that the Act already defined that the financial system comprise the conventional and Islamic, meaning that you have to apply those two. And the second one is, do the stakeholders, when they introduce the Act, they incorporate what is the Islamic banking business? For example, in Indonesia, the Islamic banking business can accept deposit based on wakaf. You see, wakaf. So meaning that Islamic banking business can do the social activities. You can produce an instrument that can have an impact on the social. So and how do, let's say, the regulators react to the market if the market want to introduce new product? For example, do they have a best core principle in, let's say, in managing certain instrument? If you don't have, so then this is the question that we need to ask to the regulators, and also this is also the challenge for the regulator to come up with that good core principle in managing the instrument. Wallahu alam. Assalamu alaikum warahmatullah.
Thank you very much, Professor, for sharing your insights. I'd now like to ask Aamir Rehman, who's a founding managing director and advisor at the Fajr Capital Group. Aamir, you're going to stand up as well? Fine. Please go ahead.
Bismillah ar-Rahman ar-Rahim. Thank you so much. I congratulate the organizers for this event, and I've had the great pleasure of attending last year as well. And it's great to see you grow from strength to strength and from impact to impact in the work that you're doing. In my comments, I will speak on this convergence that's been discussed regarding Islamic finance and impact investing. And in particular, I want to focus on the why, meaning why Islamic finance and Islamic investing should move towards impact and social impact investing, and a little bit about the how, but mainly on the why of this question. And in starting this, I'd like to thank the people of Turkey for a very important service you've done for Islamic finance, which is how you've understood it to be participation finance. And this participation finance perspective is very important because, first of all, it recognizes what Islamic finance is meant to be, which is the idea of risk sharing and participation between the client and the financial institution. But also it recognizes the universality of the principles of Islamic finance and the fact that although they are derived and very much based on the faith of Islam, these are principles that are universal in nature and need to appeal to all of humanity. And our journey towards impact investing will be very important in demonstrating the relevance and importance of Islamic finance to the broader communities in which we operate. Now, in terms of why impact investing, there are three basic points I'd like to make. There's a point about the moral imperative, there's a point about a social imperative, and then finally, the commercial imperative. In terms of the moral perspective, as discussed earlier, we must think unconventionally as Islamic or participation financiers. In fact, when we speak about the industry and we contrast it, we say there's conventional finance and there's participation finance, or there's conventional finance and there's Islamic finance. So thinking unconventionally is very important, and there were references made to the socially responsible sukuk. And one such example, if I can highlight to show the idea of unconventional thinking, was one issued by Khazanah Nasional Berhad of Malaysia, where the sukuk was structured in such a way that it benefited schools. And if the schools did well, then the return to investors would actually be less than if the schools failed to meet their social targets. And people found this confusing because generally when you make an investment and it has more impact, you would expect to get a higher return. So the question was asked in terms of why is this a step down function, meaning there's a lower return if the social impact is achieved? And the answer that was given was, well, we as Khazanah wanted to create an incentive for the schools to perform well, meaning if the school does well, its cost of funding goes down, and that to us was more important than creating the incentive for the investor. And that's an example of unconventional thinking. And when we look at the heritage of Islamic finance, as you'll be familiar, the sources and uses of wealth are very important ethical questions. And Professor Ismail was touching on this before, that from a spiritual perspective and a moral perspective, these are very critical things. On the Day of Judgment, it's our belief, and not just as Muslims, but also people of faith from other traditions believe that we will return to God. And we're told on the tongue of the Prophet Muhammad, peace be upon him, that there'll be 5 questions asked us in the beginning of our accounting on the Day of Judgment. 2 of them pertain to wealth. So one of them is how we earn our wealth, and the other is how we use it. So the idea of using our wealth for positive social impact is fundamentally important from a moral perspective. Now, in terms of the social imperative, the United Nations has done some very good work on Islamic social finance. I congratulate them for that, and I believe it will continue and grow over time. And at the World Humanitarian Summit and in the work building up to it, there was analysis done regarding the humanitarian crises facing the world and how that funding gap needs to be filled. And at the very highest level, meaning at the report from the Secretary General of the United Nations, as well as the high-level panel on humanitarian financing, Islamic finance was recognized as a source for supplemental or additional funding. And the amount of the gap that they see in the humanitarian system on an annual basis is something around $7 billion. So $7 billion is the gap. Now, when we look at just one mode of Islamic social finance, which is zakah, zakah has been estimated by the Islamic Development Bank Group to be well in excess of $230 billion per year, and closer to $500 billion per year is the zakah, which is paid, the Islamic social finance, the mandatory almsgiving. So if only a small fraction of this can be brought into humanitarian crises in a more effective way, we can bridge this entire funding gap that the UN system faces. So I believe that is both an opportunity and a responsibility for us as a community in Islamic finance to be more involved in this humanitarian work. On the commercial imperative side, the opportunity is very significant. I mean, we've heard some statistics regarding Islamic finance being around, say, $2 trillion or so of assets. When we look at the broader socially responsible investing universe, it's closer to 10 trillion in what's called socially responsible investing. And as was cited earlier, within impact investing, which is a subset of that, it's a lot smaller. That's a newer space. But certainly there's a lot of volume and investment happening around social responsibility. And for asset managers who've been operating under Sharia compliant models, they have a big opportunity to tap this other $8 trillion of assets under management if they can position themselves and show the social impact and the positive social effect of the work that they do. So there's a big commercial opportunity to expand the base of capital providers. But also extremely importantly, and I think what we really need to emphasize, is that for market share to grow within the Islamic finance industry, I believe social impact is critically important, because there's a certain segment of the market which has accepted Islamic investment and Islamic finance simply on the basis of negative screens and the fact that it conforms with Sharia, and there's a Sharia compliance element. But we have not been able to get to the larger levels of market share, and I believe one reason is that people do not see enough difference between what's called Islamic investing and what's called conventional investing. And having social impact metrics, measuring the number of jobs we create, measuring what we do to enhance gender equity, measuring what we do to protect the environment, will show people that yes, there is not only compliance with the form of Sharia, but also the spirit of doing good in the world through our investment. And I think many people who have been skeptical on Islamic finance will embrace it when they recognize this. So there, really, I've covered both the three elements, the moral, the social, and the commercial. And just in closing, I'll highlight when we talk about the how, one very positive initiative that's been launched through the UNDP and the Islamic Development Bank is this platform that's been created, the Global Islamic Impact Investing Platform. I'm very pleased to have been involved in starting it. I think it's a very important initiative. And what it does is it seeks to engage stakeholders of different communities that need to be part of this equation. Because the reality today is that there's a very large impact investing community that does not recognize Islamic finance as being part of it and being a good fit. And similarly, we in the Islamic finance world have not embraced the positive screening, the social metrics, and the SDGs that could make our propositions appeal to a broader base of investors and also demonstrate to Muslim communities that indeed we have something different to offer. Thank you very much.
Thank you very much, Aamir. Clearly have a future in advertising there. That's very good. No, fantastic insights provided there. I'd like to ask the final member of the panel, Mr. Babur, to share some of his thoughts around the work they've been doing, the excellent work they've been doing in the Islamic microfinance space in Kyrgyzstan.
Assalamu alaikum wa rahmatullahi wa barakatuh. Dear brothers and sisters, I come from Kyrgyzstan. It's a very beautiful country, and there are lots of beautiful and nice people live there. Country is very beautiful and very rich, but why people are poor, why country is poor, it's a big question. Doesn't make sense. So I come from microfinance sector. I've been doing microfinance for the last 20 years in 8 countries, 6 countries in CIS, and built a few microfinance institutions around in our region, in Central Asia mainly. I represent Bulak Finance. We established this company 8 years ago. And imagine microfinance institution within 8 years becoming one of the largest financial institutions in country, including all our commercial banks. We have more customers than any other commercial bank. We are have the largest equity and largest staff, and we have also net income is also among top 3 institutions. How is it possible for a microfinance institution is to have such success? It's not about us, it's about the country and the sector. The banking sector in Kyrgyzstan is very weak. If we compare with Mongolia, in Kyrgyzstan there are 6 million people. In Mongolia there are 2.5 million people. And there are 4 banks which have assets over $1 billion in Mongolia. But if we combine 3 our top banks, it will be only $1 billion. So that's how unbanked Kyrgyzstan is. And as of today, about 70% of adult population, they don't use financial services. So why we came into microfinance? Because very obvious. It's very easy to launch. It's easy to do, provide loans. So we started with the traditional, conventional microfinance operations in 2008. But 4 years ago, we made a choice that we need to transform into Islamic principles. Our colleagues talked about why it is important. Because, you know, we had everything, but because microfinance by itself is already impact investing. When you see thousands and thousands of people receiving $500 or $1,000, and then they get a job or little business for their business, and they're able to send their kids and then feed their families, it makes all of us happy. I think that's one of the major reasons why I'm in this business, why I'm doing the microfinance. 2 months ago, when I was in Jeddah, I had a very good conversation with our colleagues from IDB, and one said, very interesting story. One young guy goes and gets his financial education, then he's also practicing a Muslim, and then he says, okay, master, he's asking his wise man, what am I gonna do now? Should I go and work for Islamic bank? He says, no, don't go Islamic bank. Go to traditional bank and change it inside. Such a mission will be worth of living the whole life. So why I'm saying this, because we built 3 large microfinance institutions in Kyrgyzstan, Russia, and Azerbaijan. And what we want to do, we want to transform our operations into Islamic fully. So 70% of our adult population is unbanked. And the question, why? Okay, because it is important for our country, beautiful and rich country, with the resources we have, starting from gold and ending with the pure drinking mountain waters from Tian Shan Mountains, why we have such poor quality of life and poor economy. So it doesn't make sense. So we need to change this. So first of all, there's a big 85% of our population is Muslims, but there is no good Islamic banking products in country. There's only one Islamic bank which is pretty passive, and there are very few small microfinance institutions which practice Islamic principles, and this is not enough. That's why there are a certain percent of population, they don't use financial instruments to make themselves develop their micro businesses or their SMEs. Even though we are the poor country, what another good side of it, that the last 25 years our people were relying on themselves. We don't have oil, we don't have gas, so we were not spoiled, so we were all hungry, and it really boosted entrepreneurial spirit in country, and so we can really see a lot of potential. People started to be very active, and in comparison with our neighboring countries, the entrepreneurial spirit is really, really high, also thanks to some liberal legislation and some good monetary policy in country. So first reason, no Islamic products, because people are religious and they don't want to take financing. Second thing is because all our banks are small, they don't have enough capital. They don't have enough capital, they don't have enough investment into human technologies, infrastructure, so they do not deliver what entrepreneurs need. The products which the banks deliver to entrepreneurs, they're not adequate. They have too many requirements for them to receive money. So that's another another group of people, entrepreneurs, who could do the development in country, but they don't do it. And third